Did you know low float stocks are almost always the biggest movers in the market? But listen, trading them requires precision and strategy. So I'm going to jump back to a recent example of this, BKYI. And what I absolutely love about low float stocks particularly is being able to capitalize after the market opened. There's this common fallacy. A lot of people think you have to trade these things in pre-market. You can actually be patient and wait for them to set up. Now, StocksToTrade, since I helped design it, I mean, it is built for any stock, but particularly identifying these low float, massive movers that can radically change your account and radically change your life, ultimately, if you know how to trade them. Now, you need disciplined risk management strategies, and that's where Oracle comes in. I'll show you that in a second. But this is what we're looking for. Let me kind of give you that recipe. You can literally apply this recipe tomorrow morning, okay? When I speak of low float, let me just kind of briefly explain what it is and why we care, okay? So the float is the freely tradable shares of a stock. That's the supply, okay? And then with the lower the supply, if you think back to like your high school economics class, right? What was the first rule they taught you? Supply and demand. So if something has a very limited supply to trade each day, and there's high demand because of a press release or maybe a pump or some of these market moving events, well, that creates demand. So that's why we care about these stocks so much, because think about any asset. I don't care if it's gas, oil, oranges, lemons, anything, the hot Christmas toy. If the demand is through the roof and the supply is low, then there's a very, very good chance that the cost of that thing is going to explode in a very short period of time, and we can capitalize on that. Now, what defines a low float stock? The traditional cutoff is 10 million shares in the float. Now, that's not a brick wall, okay? If you look at some, what I could like to call like real stocks, like Apple, Microsoft, they'll have billions of shares in the float. So even if a stock has like 11 or 12 million in the float, it's still kind of in the ballpark. It's not a hard cutoff. But lower the float, the better. Lower the float, bigger the supply, more float rotation creates epic moves. So let me go to a recent example on BKYI. This was literally yesterday. And it's a great example because you look at BKYI, they dropped some news right about 8 a.m., well-timed PR, and you can see the stock gaps up from $1.35 to $2.50. Now, this is where you need risk management, this is where you need Oracle, and this is where you need an actual trading strategy. Because there's a lot of people that fall into this trap of chasing that initial move. They see the press release, they see the stock spike, they have no risk management, they have no trade strategy, they pile in, and look at what happens with BKYI. Goes almost all the way back. I mean, it started out at $1.30, goes up to $2.50, goes all the way down to a market open low of $1.47. So all those chasers that couldn't wait for the trade to set up got absolutely wrecked, okay? Now, the great thing about BKYI, less than 2 million in the float, micro float, really, and it was trading in the morning. You look at this thing, it's trading about 10, 15 million shares in pre-market. So that's given us what? 6, 7x float rotation, and it's setting up perfectly. Now, this is where a trading strategy and having risk management comes into play. So let me jump you over to a screenshot that I took yesterday of BKYI as it proceeded towards that Oracle signal. Now, if you've never heard of Oracle, it's a day trading algorithm that uses price, volume, Fibonacci's, VWAP, bunch of secret sauce, okay? It has all of these built into the algorithm so that you don't have to watch all these indicators. And it also does technical analysis. If you're struggling with support, resistance levels, Oracle does that. And on top of that, gives you entries, stop losses, and profit targets. So you can see with BKYI, going into that magic time of 9:45, if you're a subscriber to the channel, you know how much we love letting stocks shake out at the market open and trading the strongest stocks into 9:45. So that signal comes from Oracle a couple minutes after the market open. That's by design because it takes in all the market open information, all the sells, all the buys, as well as looking for like block trades, big trades, and tracking that information. Then the algorithm does its work, calculates a defined entry, and delivers that to you at about 9:33 a.m. So all the chasers in pre got wrecked. The Oracle traders waited for that $1.58 signal to hit, and then you had a stop loss at basically the morning lows, which is about 12 cents lower. So let's talk about what happens if the trade fails to follow through, as we say. So in this instance, think about whatever your position size is. You can do the math in your head, but in this instance, you'd be risking about 12 cents a share. Maybe you got 100 shares, maybe you got 1,000 shares, maybe you got 10,000 shares. So you can calculate what you would lose on this trade. Then think about the upside. Okay, we're here to make money, but we always have to control and manage our risk and keep our losses small. 12-cent loss, and then this stock hits the signal, proceeds to go all the way to $3.68, over 132% of upside. Now, to be clear, you can see the resistance levels. A lot of smart traders sold right here at 256 when it kind of struggled with these levels. Now, these levels are calculated in pre-market. You know them in advance, but think about that. That's almost 100% trade in about 45 minutes. Now, the nice thing is you can use these levels to kind of guide you through the trade, and then maybe you use the lower level and decide that's my new stop loss for profits. You let the trade run as it's channeling between these support and resistance levels, and you catch the second leg. Now, that would be very aggressive. That would be a very aggressive strategy. The safe play would be just to sell into that initial profit-taking area that Oracle gives you. And again, you're looking at almost 100% trade for something that you're risking 10 or 12 cents of downside on. That is why we love low float stocks. They make these moves. I mean, think about it. At one point, this stock was up over 200% on the day, okay? But if you use the Oracle signal, you had a potential of 132, so you're catching that meat of that move, predicted in advance, no guessing games, no panicking, no chasing, none of this stuff. You simply wait for it to set up. So that, my friends, and you will see that, listen, BKYI, last point I want to make, not unique, okay? These happen all the time. This was yesterday's. Today, there's probably going to be another one. Tomorrow, there's probably going to be another one that matches this very specific recipe. StocksToTrade has all the scans to spot these low floaters. Couple it with Oracle for your risk management and your entries and exits, and you got a game changer. So that being said, my friends, do you love trading low float stocks? Give me a comment below, because I do, man. When it comes to big gains and small losses, low floats are where it's at. Now, if you heard me mention the scans in StocksToTrade, you heard me mention Oracle, all these tools for news and interpreting the float and even calculating float rotation for you, all of those are built into StocksToTrade, and we use them every day in the daily income trader system. If you're looking for more guidance, live webinars, live trading, definitely hit that link below. It'll take you to a free webinar, which gives you a full tour of everything included in the daily income trader system. I went over about 4 features. There's about 100. So check out that webinar, and good luck in your trading.